just got a surprise on the inflation reading. We just got a beat, but markets here are still moving to the downside. What is going on? Why are markets not reacting to this? And why are we still getting a sell-off? We need to break down so much. If you like these updates, smash all the likes. Do not forget to subscribe. I'm still sat here in my sling. It's getting so annoying, so I'm going to have to present using my weak hand on this mouse, which, by the way, if you haven't tried it, it's quite difficult, but definitely give it a try. Meanwhile, even with one hand, I'm trading better than most of the fake traders out there, so make sure you're in our Telegram community, ijazcrypto.com/TG. We've got quite a few active trades open. We've done really well bringing in those spot returns. Again, over 200% returns in a single month. Check out how I trade altcoins using the link in the description. Now, Bitcoin, kind of struggling here over the hourly chart. We did have a little bit of an excitement when the news came out, and the news was that we had a good CPI reading. What do I mean by that? Well, take a look here at the inflation rate. Markets were expecting 3.1% inflation. It came in at 3. Very good, right? Last month was 3.3. You can see this is quite a bit of a notch down. A nice figure, the best one we've seen in pretty much a year. Okay, good stuff. Soon, we should be able to get inflation with that 2 handle that Jerome Powell always talks about. We need to get to 2% inflation. We're knocking on the door now. We're at 3.0. Really good. But there's something a bit more than that. You have to dig into the details to take a look at the month-over-month figure. Because when you look at the month-over-month figure, you'll see this. We actually had a deflationary month on headline inflation. So the market is expecting this to go up, i.e. be a blue color here, up 0.1%, a tiny increase. This went down 0.1%, which actually means that if you carried on this run rate, which it wouldn't, but if you carried on this run rate for the next 12 months, you would deflate the economy by 1.2% over a year, which is really impressive, right? So we had a deflationary month, which is really positive. One of the reasons markets are excited. But I'm going to show you why the markets aren't as excited as you think. So we need to be very careful here. Taking a look at the core inflation, that was expected to come in at 3.4. That came in at 3.3. That was a beat. Taking a look at the core month over month, expected to come in at 0. Well, some people say, yeah, 0.1 was the general consensus. That came in at expectations at 0.1. So all that said, we sit here, we know that the government of Germany have been dumping their crypto. We know that the Mt. Gox issues was causing concerns. We've covered this off. We know that Bitcoin's pulled back. But why are we not excited right now? Why is the market still lackluster? Well, you need to understand something. Traditional markets are rotating. Very important to understand this. Take a look at this. S&P falls from record as investors rotate out of 2024 tech winners. Yesterday, you saw a big rally in the traditional markets, right? Traditional markets, and particularly tech winners like Nvidia, like Meta, like some of these companies have done really well. And now these investors want to rotate out, which is one of the reasons we're seeing risk rotate slightly off right now. In other words, you are seeing money flow into the more safer parts of the stock market. The Dow Jones is doing a little bit better. But look at the Russell. Look at the Russell 2000, up 3%. People are going to start moving their funds into some more of the housing plays, some more of the companies like Caterpillar and infrastructure plays, because guess what? They expect the Fed to start cutting rates. Cutting the rate should start to give some energy, some impetus, some excitement and flow of money into the housing sector. So now, instead of just relying on players like Nvidia and Facebook, Meta, and all these guys to hold the stock market, because those were the only ones kind of giving you some gain on the market, people are now going, hang on, if the Fed are going to cut as soon as September, right? If they could be cutting as soon as September, which, let's be honest, we've been waiting a long time. It's around the corner now. Right? Then they need to start making their moves. They need to start rotating from some of those plays into some of these smaller plays and more traditional plays. Hold up! Do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit, so you could learn to become a profitable trader. Check it out. Link is in the description. What does that mean in terms of the market, in terms of the rate cut? Well, our next Fed meeting is on July the 31st. Nobody here, I mean, apart from this 9% here, markets are not really expecting a rate cut. right? We're not expecting one in July meeting. The next meeting here in September the 18th, which is, not long from now. Again, if you think about it, there is no meeting in August, but September the 18th, that is where the vast majority of the market expects our first rate cut. And this inflation reading, which we've just got, just goes to further emphasize that this market's going to be now focused on this September the 18th meeting. This could be where things start to change. But we're not that silly, are we, guys? Remember, your job as investors is to be ahead of the curve. If you're waiting till things are certain to then make your moves, you're too late. Look what I just explained to you. The market is making decisions today for what they expect to happen on September the 18th. So while you're panicking, these guys are positioning themselves for the next move ahead. And that's what you need to learn to be able to do. Whilst the majority of the market are having heart palpitations that Bitcoin retraced a little bit, which I'm going to come on to, the retracement's not as bad as we may think. You need to understand this bigger picture, which is why I tweeted. If you're not following me at RealIjaz1, get follow me on X. And again, in our Telegram group as well. Only 0.26% of the global population can ever own one Bitcoin. Right? Just conceptualize that in your head. Like the success story of Bitcoin doesn't rely on every single household in the world adopting Bitcoin. It doesn't. It doesn't need it. If every millionaire just decided I want one Bitcoin, there's not enough to go around. Bitcoin has to go through the roof in terms of price. It's just basic supply and demand. So anybody continuing to bet against Bitcoin or panicking because of a bit of retracement, calm down. Right? Take a look at this. I also posted this for a bit of context as well. How bad is this crypto correction? Right? Like, where are we at on the scale of corrections? Because I wanted to put this into context for you. So the correction we had is pretty good, right? I mean, this is that line here. This is the correction we've just faced, right? Not bad, not too bad. I mean, it's comparable to kind of here with COVID, kind of the little bit of panic levels we saw in COVID, comparable to the pullback we saw in 2018 as well. Okay, fine. But it's nowhere near what we've been through in terms of this cursor here. Look at this bit here. This was the mining ban in China. This was the Terra Luna collapse. The Terra Luna collapse was 4.6 times higher, the pullback, than what we've just experienced. So imagine the fear in the market at that point. The pullback we saw in the China mining ban was 3.3 times the pullback we've just seen. So when people are panicking that, Bitcoin is kind of just coming back here into some semblance of support, it makes very little sense to me. I mean, this is what people are panicking about. I mean, it's a pullback into your trend line. Like this is where I just don't understand. And that's what kind of reminds me that the majority of people in this market are very skewed in terms of their ability to invest. And I don't mean this in an arrogant way or anything else. You guys know I worked in traditional finance, and you have to understand that traditional finance started out like this too, but it matured over time. And you cannot at the moment compare the crypto investors to the traditional investors, because crypto investors are still trying to become a little bit more financially astute in terms of investments. They panic by this kind of a pullback. The more experienced traders, the institutions which you see in the traditional markets, they don't panic by this stuff. They understand when the time is to jump in and when to jump out. And again, I'm going to back it up with data. I'm not just going to tell you this stuff. Take a look at this. Take a look at this. Whilst everything was going on, long-term investors scoop up 85,000 Bitcoins in 30 days. Look, the short-term people are selling, right? The short-term people are panicking and selling, and these long-term people come in, swoop it up, say, thank you very much. We're going to hold now through the rate cutting cycle. Thanks for holding it through the rate hiking cycle. Thanks for doing the hard bit for us. We're going to come in now, and we're going to ride this back to new all-time highs as Jerome Powell starts to print money again. And that's the thing. Like, I don't know how somebody can be shaken out of their Bitcoin. Imagine how little conviction you have to be shaken out of your Bitcoin right now by this pullback. And keep in mind, the people who are most underwater now who are those who are literally buying right at the top there. They're probably down on their portfolio 20% and they're panicking. Like, why are you holding crypto if you're panicking by 20%? And I know the real answer. Most people don't have Bitcoin in their portfolio, so it's not 20% down. Most people who are panicking look at their portfolio and go, I've got all these crap coins, and now I'm down 90% because Bitcoin's down this percent in a week. So just because Bitcoin had a 10% down week last week, your altcoins got wrecked. So this should be a lesson for you. If you've got misallocated portfolios, you're going to get wrecked in any asset class. The equivalent of what you're doing in crypto is saying, I'm going to be a real estate investor. I'm going to buy a bunch of real estate in the middle of Ukraine. I'm just going to have risky real estate. Like, it's just silly. It doesn't make sense, right? You don't want any secure property in, I don't know, you don't want any in New York, Manhattan. You don't want any London property in your portfolio. Or you're building a stock portfolio. You've just got a bunch of penny coins. You don't have any Facebook. You don't have any Google. You don't have any Apple. You don't have Amazon. You're just building this degenerate portfolio. Then, of course, you're going to have bad days. Right? Of course, you're going to have horrible days with, oh, crypto's rubbish. You just don't know how to allocate your portfolio. And I think sometimes we all need reminders that, look, the reality is if you held Bitcoin and you're down 20% here, again, assuming you bought right at the peak, which you shouldn't be doing, you should be buying from support and, you know, levels like this over time. That's the difference. Those are the people who are feeling it right now. So really, really positive, good inflation reading, really feeling happy about it. I think it's something we were expecting anyway. The markets will now rejoice and be like, okay, good. Inflation's coming down. We should have a 2 handle by the next reading. Jerome Powell's no excuse that, okay, we'll give you a pass in July. Don't rate cut in July. But by September, can we get that rate cut? Can you maybe squeeze another one in before the end of the year? So at least 1 or 2 this year, and then a nice, exciting start to next year to really start cutting those rates, loosening policies. And guess what, guys? That's going to put extra money in people's pockets. And when people have extra money in their pockets, what do? They look for risk-on assets. So that cycle will come back. It may take a little while, but that cycle will come back where they start looking for those risk-on assets to say, you know what? I've got some money in my bank now, finally. My mortgage payments have gone down. My car lease payments have gone down. I'm going to start to invest. I finally got a little bit of cash flow, which I can put in some investments and put into some crypto. So exciting times ahead. I'm looking forward to it. Good CPI reading. Let's not panic. Thanks for watching, guys, and I'll see you in the next one.